Just finishing up, rounding up my trading session, so I thought I'd jump on and do a bit of a Q&A. Over the last, I don't know, month and a half, there's been quite a lot of interest in my trading in particular because I launched a video. I launched a video called Trading for Beginners, and it's got about 500,000 views on YouTube. In the last 45 days or so, so it's been quite popular. And I'm just wrapping up my trading for this morning with our guys. I'm in a short trade on the Aussie dollar. There's a similar one on the Aussie CAD, but that didn't meet my rules. There's also a really nice structure-based setup following the short on the pound Aussie, now looking for a long on that. Just got to wait for the entry, and then that's about it. So, the pound yen I'm already short as well. So the pound yen I was short from last week. We had a double top, then we had a triple test right up at that weekly resistance zone, and I shorted that. Targets for me on that are down at 172.20. So if you're a trader and you're interested in that kind of thing, then that's the rundown of what I'm looking at. But I thought I'd just come on and I'm on the treadmill whilst I've finished wrapping up my trades. What's the best way to learn the terminology? I keep getting set back trying to learn because I have to keep looking up the terminology. Repetition is one good thing. First thing I would say on terminology is make sure that you're not learning everything. A lot of people go off, when they start to learn to trade, what they have this idea is I'm going to go and read loads and loads of different books, and I'm going to go onto babypips.com and I'm going to download the whole resource center into my brain. And what that does is, it's a poor approach, because you don't have to know everything about everything, and you don't have to know every single term. And taking that approach is basically like trying to learn to have a conversation with someone in English by reading the Oxford Dictionary. Okay, so if you read all the Oxford Dictionary and you knew every word, it doesn't mean you can string a sentence together. And that's what people do when they think they're going to learn to trade. You actually don't need to know every term. You just need to know enough. So you need to be directionally correct. So I would say get a mentor or get someone who you believe in and trust, and just watch them and immerse yourself in their content. Like, go and get as close to them as possible, watch over their shoulder, and just do it every day. And after about 2 or 3 weeks, you start to get a lot of repetition. You start to... it's like learning a language. When you're a baby and you learn a language, all you learn it by is just being told, no, don't do that, or mum, dad, and all the rest of it, right? So it's the same sort of thing. Learn the terminology that is relevant to the direction you're going in, and learn just enough to keep moving forward. Otherwise you can get stuck in this hamster wheel of never moving forward with it. Top-down analysis, time frame to start. That's a good question. Pick your time frame that you can trade on. Okay, so I have a rule of thumb that if you can only check the charts once a day or twice a day, and I'm not talking about like, I might get a lunch break where I can quickly check in, or I've got a free day on Thursday so I'll be able to check a lot then. I'm talking about consistently. That's not going to be interrupted by client meetings, school runs, gym sessions, all that kind of stuff, sleeping in. You want something consistent. And then once you know what blocks of time you can do, if that's 1 or twice a day, stick to the daily time frames for your trading time frame. If it's more than that, if it's 3 or 4 times a day that you can do it consistently, you might go, right, I can do it at 8, 12, 4, and 10 p.m. Then you might want to consider the 4-hour time frames. And then so on, right? It's kind of common sense. But once you've got the trading time frame, go up 4 time frames and down 4 time frames, and that will give you your higher time frame and your lower time frame. Okay, so if you pick the 4-hour, use the daily and the hourly as your higher and lower. And if you trade the hourly, use the 4-hour and the 15-minute, right? And if you trade the daily, use the weekly and the 4-hour. Make sense? That's a great place to start anyway. Struggling with a trade plan. What part of the trade plan are you struggling with? Because a lot of people think the strategy is the trade plan, like how you actually execute trades. That's one part of it. Trade plan's there to give you an edge, and the trade plan's made up of your routine, okay, your consistency, what I just spoke about, what markets you trade, what time frame you trade, when you trade them, when you don't trade them, okay, and then the strategy, which is the actual setups and the execution rules, money management, risk management, journaling, optimization, right, and refining, and then account managing and actually managing your wealth. So all of that is what's going to give you an edge as a growing, profitable trader. So let me know what bit of that you're struggling with. What sort of base knowledge do you suggest you have before trading a demo? Ed McGawley, go and watch my Trading for Beginners on YouTube. Go to youtube.com/Jason Graystone and it'll be the first video there on the homepage. As I say, we launched it in the last 45 days. It's got something like almost 500,000 views, and it's a 2.5 hour comprehensive start to finish, going through what it is, what trading is, how you should approach it, what you need to know, what you don't need to know, the basics. Honestly, it's comprehensive, so I would start there. I even go through demo accounting and all the rest of it in that video. What is your opinion on ICT? I think that's one of the trading challenge type firms. Spoke about this earlier in my live room. The trading challenge companies like FTMO and all that, right? You have to be careful because a lot of them are a wolf in sheep's clothing. What they do is it's a win-win situation for them, okay? You have to, at the base level, you have to ask yourself this. If all professional trading is focusing on process over outcome and consistently profits over a long period of time, if I'm a prop firm and I want you to trade for me, so it's my best interest to be in your best interest, to teach you the right approach so that you can then succeed and trade my money, okay? Why the hell would I teach you an approach that is not conducive to becoming a consistently profitable trader? Why would I put pressure on you to make a profit in a certain amount of time? I'll tell you why. The failure rate of traders is very high, okay? So let's just say the model is you pay them to be on the challenge and you have to give them £1,000 or something, right? And they get 1,000 people apply. They've got £1 million in the bank, okay? Not only have they got the odds stacked in their favour that most people fail, so that's just easy money, you just give them their money, you're going to fail, right? On top of that, they're increasing the odds in their favour by putting pressure on you to make a certain percentage return in a 30-day period, which is pure luck. You know, if I said to you I'm going to make 10% in the next 30 days, I might do that, but it'll be luck. Because I don't know when I'm going to make 10%. And I never have, and I've been trading for years. Right, and I don't know, like on the April the 3rd, 2020, when I had my biggest trading day ever, I didn't know I was going to have my biggest trading day ever. It's pure luck to basically say, I'm going to earn this much in this period of time. You never know. So you have to focus on period over time. So there's that. And then lastly on that, they then, maybe 1 in 1,000 gets through because they get lucky. And they say, okay, we'll now increase your account to 50 grand or 100 grand, but they've just banked $1 million. It's like a wolf in sheep's clothing because it's disguised to make you think that, oh look, they want us to succeed, they want us to help us grow our account. They don't care, because if they did, they wouldn't be teaching you an approach that doesn't work for their firm, right? That isn't in favour or the best interest of trading their money long term. The much better way is to prove to yourself over a 6 to 12 month period that you can generate consistent returns with low volatility in your equity growth, meaning no major drawdowns, ideally not below 5%, okay? If you can do that and prove that to yourself, even with a small account, you can then go out to investors and you can say, listen, this is my results over the last 6 months or 12 months. This is what I'm projecting forward. I'm seeking investment. And I can do, 10% for you, for the investor per year. But what makes it better is you say, I'm only going to take my commissions when I hit new equity highs in my account. So Next month we hit a new equity high, I take a percentage of the profits. Okay, you give me the money to trade, I take a percentage of the profits, and then we can go sideways for 3 months and I don't take a penny. When we hit the new high in my account, I take a percentage of the profits, and it's called a watermark system. It's very, it's very attractive. And if you can do that and stop rushing to do it in 30 days, if you can just do that, people will throw their money at you. There's no shortage of money, believe me. People are desperate to put their money into good investments. And a good investment is someone who has a track record of verifying and proving time and time again that they can deliver the results that they say they can deliver, and then people will throw their money at you. Inflation rates going through the roof, people are looking for, places to put their money. What Forex pairs you recommend for scalping? None. Scalping is a waste of time, unless you've got a massive account. There are people out there promoting scalping systems where you get in for 1 pip, get out 1 pip, or 2 pips, 2 pips, right? The spread on the pair is 2.4 pips. So you're going to lose money. It's costing you more to get into the trade than you can possibly get on the exit. So unless you've got a massive account, right, and you've got a very, very high strike rate, and you want to spend all the time in the world at the charts doing that, then I would strongly recommend you don't do any scalping whatsoever. So with funding challenges, is it best to use a company that does not have a time limit? Yes. And here's I've been on a few. I've seen the back end of many of these brokerages. Okay. And I would just say this. Firstly, yeah, make sure that you're one that goes with a 12-month period with a realistic percentage return. Okay. Second of all, make sure that when they do actually fund you, that they don't put you on a B book, okay? Or when you're on the B book and when you're on the A book. Does anyone know what the A book, B book is? Basically, brokers know that you will probably not succeed trading long term, because most people can't do it. So what they do is they put you on a B book, so they trade your money internally. And what that means is when you place a trade, your order doesn't actually get put through to the actual market. What it does is they just trade it internally and they bet against you. They just take the opposite side of your trade. With the belief that over a long period of time, even if you win a bit of money over a long period of time, if they take the opposite to your trade, they're going to win over time. Okay? So that's a B book. And then what most brokers do is they put you on that book. Your orders aren't actually being placed. So it's a bit unethical. It is legal in most countries. And that's what they do. And then if you're doing well, then they'll transfer you to an A book. Okay? But then what I've also heard is a lot of horror stories of people there's resistance on payouts when you do well. So just have a conversation with them and lay down the law, get it in writing that what's going to be what. And that will just give you peace of mind. I saw in one of your videos that it isn't advisable to start trading with $100. What would you recommend from Kenya? Right, so here's the thought process behind that. If you're going into trading as a new vehicle for building wealth and you want to prove that you can get really good returns on your money and you're not worried about the actual monetary return right now, then $100, great, right? You can get let's just say you got a 30% return on your money after a year. Okay, amazing. Lots of investors will throw their money at a 30% return investment. Even if you give them half of that, even if you give them a third of that, it's going to be a very attractive investment vehicle to attract investors. Most people aren't going into it for that. They're going into it for, I want to make money. Okay, so $100 you trade for a year and you get another $30 profit. Is it worth it? Okay. Is it worth it? All the time and effort and emotional drainage that you got to go through to learn how to trade and master it, to get $30 at the end of the year, is that going to be worth it? The quickest I've doubled my account is in 18 months. That's the quickest I've been able to double my account in all the years I've been trading, is 18 months. So even if you go 18 months and you end up doubling your account, you've only got another 100. Okay, so that's point one. Point two is, if $100 is all you've got to your name, you haven't figured out how to make money yet, and how to master your wealth, and how to manage your emotions around money. You're still being run by money. So therefore, even if you do go for 12 months and get amazing returns and do 100% on your money in 12 months, and you go to investors and say, I can do 100%, look at this. And they go, wow, yeah, you can do 100%. Here's 100 grand. How do you think your emotions are going to change trading that 100 grand? You've never ever managed that kind of money. You cannot even comprehend that amount of money because you've only got £100 to your name. Okay, and your emotions will affect your trading. I've seen this happen time and time again. I've seen it happen a lot. So that's my philosophy around that. My advice is to go and figure out how to make money by serving people. Okay, look. Here's the thing: whether you're trading or investing or wherever you're putting your money to work, you need income. Okay. The income doesn't just start from trading. You need money to put into an account to then grow it. Okay, and then you go and check out my wealth liquidity system, right? You build the wealth liquidity system, and then the income starts coming from what you've created, the assets that you buy or create. And you buy them by investing in the market, or you create them by putting a system in place or learning a skill, and you add it to your portfolio. But until that point, you've got to go and get income coming in, right? You've got to turn on the income tap. And the way you turn on the income tap, the easiest way to do it is to go and serve people and go and give people service and charge for it. With a 10k account, could you have a good return after 10 years? Look, that question, like 10k account, could you have a good return after 10 years? A return is a percentage. It's nothing to do with the amount that's in the account, right? So, what is a good... If you're talking about, like, the actual monetary return after a 10-year period, work it out, right? Let's just say you do 20% a year in your trading. What does that compound out to in 10 years? And when you get that monetary figure, that's going to be a monetary figure that is only relevant to you. You know, what do you need it for? Is it your... Are you saving it for something? Is it going to be a legacy that you leave behind? Is it a will? Is it your estate? Is it going to pay for your lifestyle expenses? If so, how much are your lifestyle expenses per month? And how long will that buy you? Remember, everyone always says time is money, but it's not. Money is time. Money and liquidity is how much time you can buy into the future, how much choice you've got. So add up your living costs. Whatever the return is, let's just say after 10 years, you've got 100 grand. Okay? How long will 100 grand last you based on your current lifestyle costs? And that's it. Have certainty in your numbers, because then there's no wishing and ifs and buts and leaving it to chance. What is the best thing to do to gain confidence in your trading? Would you say it's backtesting? 100% backtesting. Yeah. We've all got the opportunity to look at a chart that has historical data going back years and years and years and years and years, with all different seasons, all different economic disasters, all different news announcements, every single pandemic, global financial crash. We've got oil crisis, we've got Fed hikes, we've got COVID, right? We've got all these things, and the beauty of it is we can look at that chart and see a pattern of how humans behave around those things. And we can then see little patterns that happen frequently. We identify the patterns that happen frequently, and then we build rules around them to capture the move, okay? When we've got those rules, we can then go and test those rules over 10 years, allowing for all the different seasons, all the different news announcements, all the different climate the economic climate changes, news releases, all that kind of stuff, and then we can find it to be profitable or not profitable. If we find it to be not profitable, we can tweak it until we do by either giving your stop loss a bit more breathing room, extending your targets and hitting higher home runs, maybe taking higher quality trades instead of, maybe you see some structure-based confluence where you say, actually, I'm only going to take these ones and not those ones because those ones always fail. You might find that August isn't profitable. You might find that September isn't profitable. You might find that Monday isn't profitable or non-farm Friday isn't profitable. You remove all that, you then go and optimize it, test it again, and you've got 100% confidence that you've done all you can to raise the high probability that you should generate the returns that you see in black and white on your testing. That's all we've got to go on as traders, because no one knows what's going to happen next. I don't know what's going to happen in that next candle on the market. So if that's all you've got to go on, do that. If all we need to do to be successful at trading is to have a strong mindset and a belief that we've got a high probability of generating a profit over time, why would you not go and test the system to give you that support in your mindset? Why would you not? That's the question I always ask, and no one's been able to answer. Why would you not backtest? What do I do when people make fun of me because I'm trading? They don't take me seriously. Who cares? Who cares about other people? You've got one life. Do what you want. Like, you've literally got like 90 years on the planet. And if you're at least 18, which I assume you are if you're trading, you've got like, 70, 80 years left. Why are you even worried about other people? Why, like, words and air coming out of people's mouths has no effect on your life whatsoever. What time frame would you trade when working a full-time job? 8 till 5. Okay, I'll answer that one, but just going back to that last one quickly, I would say this. Tell people that you're doing it, all right? Don't shy away from it and make it something that you're embarrassed about or shamed of. Tell people what you're doing. One, it will give you the motivation and discipline to go and accountability to stick to it. And two, it's something you believe in by bringing it to the surface and you know, telling people what you're doing. But you absolutely should be doing whatever you want to do. We haven't got time to worry about what other people think. What time frame would you trade when working a full-time job, 8 till 5 in the UK? I would stick to the daily or the 4 hour, and I would try to manipulate my day around working for my trading. So here's what I did first of all, right? Started off trading higher time frames, and then when I found out that I could start generating profits from that, I started structuring my day where I would build it around my trading. So I would just cancel my lunch times and cancel like a Wednesday afternoon, and I would just literally work on my trading so that I could do more and more and increasingly do more and more trading and less work. But start on the higher time frames. You just want to be consistent. That's the most important thing. Is it difficult to mentally deal with large amounts of money if you started with a small amount? Yes, if you exactly. I would say this. Again, it's logic, right? Trading a 10 grand account requires probably the same emotional skill as trading £1,000 account. Okay? Trading a 100 grand account may use the same emotional as a 10 grand account. Trading a $500,000 account uses the same emotional skill as a 100 grand account. Trading $1 million account uses the same emotional skill as a $500,000 account. And trading a 2 million account uses the same emotional charge as a million account, right? But a million account doesn't use the same emotional demands as a 10 grand account. So, earn your right to risk. Get out there, test it. Go and trade, slowly build up. Then seek investment and say, I've now got this. And the most important thing is you want you want to get your performance going well so that people will invest with you, and then it's exponential. You can really experiencing the compounding growth when you prove to yourself and you just take a little bit longer to do it. What people do is they end up trying to rush and then they never get there. Like they bolt too early and then they blow all their chances because they take on $1 million and they can't handle it. It gets to them. And then it's game over, right? You can only play while you got chips on the table. So I'd rather take a little bit longer and be a bit more strategic and reap the rewards of long-term plays than I would trying to just quickly get a big account and then blow it all. Or be very limited to what I can manage. You want to become seasoned and you want to become acclimatized to that level of risk, and you do that by having a strategy behind that as well. Why would a broker cancel an order when you hit your buy-in price? Oh look, there's one of my fake accounts just joined. Hello, Bradley Moyes with my photo. Yeah, why would they do that? You can go and report that account, by the way. Why would they cancel it? Either you've hit margin call, which means you don't actually have enough money in your account to place that order, so they cancel it off. Second of all, you might have placed an error, like you might have placed the wrong type of order. That's it. Can't think of any others. But give them a call. They're usually pretty good. Always make sure you've got a broker that you can ring up and speak to, someone who knows you on a personal account management level. It's a big warning sign, red flag when you've got all these hurdles to jump over when you ring the broker, right? So I did a video on that as well. I opened 6 accounts with 6 brokers, downloaded 6 platforms, traded with all 6 platforms, done a whole review of them, closed all the accounts down. I was measuring resistance on closing the account when I rang them up and all this kind of stuff. And you can go and check that out. It's called Brokers Exposed on my YouTube channel. And I give you guys a whole tool to go and analyze all the brokers to come up with one that will suit you. Completely free, so go and enjoy that. Any trading books you recommend? It depends what stage you're at in your trading of what trading book I would recommend. A lot of people recommend like Trading in the Zone by Mark Douglas. It's a great book, but it's no good reading that book if you're brand new to trading, because you probably won't understand the pain that he's been through to write that book. It's kind of like telling a kid not to, don't jump off of that, you'll hurt yourself. Don't jump off of that, you hurt yourself. And then they have to do it to hurt themselves to then get wise. That's kind of that book. It will tell you a lot of valuable information if you've been through the pain. And you go, yeah, that makes sense. That's why I did that. And that's profound. So Trading in the Zone by Mark Douglas, if you're struggling to generate profits, go and read that. Daily Trading Coach by Brett Steenberger. I love that. One Good Trade by Mike Bellafiore. There's loads. Is there a point in looking at other time frames, like 2 hours, 8 hours? Not really, but I would say if you do, like, put it this way, you want to go for the most commonly traded. So the point of building an edge in trading is you start with a philosophy of looking at where most traders are looking. So if you think about it, and this is another reason why scalping and lower time frame stuff is so unsuccessful, because think about a trade that's setting up on the 5-minute time frame. How many traders are going to see that? Not many, right? How many traders have got the time to actually get involved with that? Not many. Whereas if you go out to the weekly or the daily, you might hit a structure level where you've been looking at it for weeks, you've written articles about it, and everyone's talking about it in the community, and it's on the news, right? And the analysts and the squawkers are out there going, here's my report, this is a nice structure level coming up for the weekly resistance, and this is, we'll be looking for some deceleration in the market as we approach that zone, and everyone's talking about it, so there's more eyeballs on it, okay? And you've also got a longer time to react. There's going to be more people involved with it. Therefore, a higher probability setup, right? Now the power, so with that in mind, you want to trade you want to look at what most people are looking at, and the common ones are daily, 4 hour, hourly, 30 minute, 15, and so on. The next thing I'd say about that is the power of multi-time frame analysis just gives you confluence where there is congruency between all of the time frames. So if your prediction is made on a higher time frame and all the way down the time frames you've got like congruence there and confluence, then that's a very strong, it adds water to the setup. Do you have any ideas as to why you can't trade FX in certain countries? Why I can't, or why people can't? There's different laws and different rules in different governments, unfortunately. For example, if you're in America, it's illegal to hedge, and you don't have things like spread betting accounts. So yeah, I'm not the law, but it just is the way it is. Some people just can't make like payment transfers from. So I was talking to someone the other day, and they were trying to buy something in Nigeria, and they're in Nigeria, and their bank wouldn't let them send money. They're like, no, you can't buy that. They control what people can buy. You're crazy, right? How would you define spread betting? Spread betting is just the name of an account that eliminates you from having to declare taxes. Okay, it's not really any different as the way it works. It's just a different name for an account, so that it's classed as gambling, and you don't pay taxes. Do you ever look at the fundamental side? I only look at fundamentals when I'm looking at trade management or staying out of a trade. So I never place my trades based on fundamental analysis. I always place my trades based on technical analysis. But there are certain trades after testing that I stay out of during, like non-farm payroll Friday, which was last Friday, which is this Friday. Was it last Friday? Last Friday, wasn't it? Things like that. Or if I've made a prediction and the fundamentals play in line with my, let's just say that I get into a long trade and the fundamentals play in line with my technical analysis, meaning they push the market up. Sometimes what I can do, if I'm allowed, is to manage my stop loss, trail stops on a lower time frame to squeeze out as much profit as possible. I did it on a dollar CAD a couple of years ago. It's probably the last time I've done that, and it was about 600 pips, which was good. And other than that, I just use it to either get out of trades, stay out of trades, or don't trade. So that's pretty much it. What's your target in terms of steps, distance, or time? I'm trying to get between 10 and 20,000 every day. So 10 minimum, 15 ideal. Started your podcast yesterday, some serious information from you about the biggest turnaround in my life. Amazing. Start from episode 1. If you want to listen to my podcast, start from episode 1 and listen to them in order. That's the biggest bit of advice I can give to people starting the podcast. But everyone who I've met who's listened to it, or I've had many messages say similar things like that it actually makes them rethink their life and gives them a clear path, and they've got a lot of value from it. So I'm really, really grateful to be able to share that to so many people far and wide through the medium of podcasts, even though I have got an annoying voice. I already saw around 70 to 80 episodes. Amazing. I think there's about 160. On the hourly charts, how many trades a day on average? I understand patience is key, but don't want to undertrade. Well, all undertrading and overtrading is taking trades that are outside what you should be taking based on your flawless trade plan. Okay? Should you be in the trade or shouldn't you be in the trade? That's it. Your plan, you create your plan tells you when to trade. Okay? The next thing is, on the hourly time frame, It depends how many strategies you're going to be placing on that hourly time frame and how many markets you're going to trade. So I know people that trade one strategy across 28 markets, but I also know people who trade 5 strategies across 5 markets. Okay, so it's going to depend on the frequency. Now, if you're going to go and pick one strategy on the hourly time frame, what I've found average is anything between kind of 13 and 20 per year. One strategy, hourly time frame for the year. I don't know if anyone's found any others than that. The exception to that, remember, I'm just going off what I've tested and what I've dabbled with and traded and all the rest of it. The exception to that is my FTB setup. That plays out a lot more frequent, but normally 13 to 20 trades per year, per strategy, per hourly time frame. You've got a UK accent. I know, I don't know how. It's almost like I was born here. All right, well, look, cheers for joining us. If you got value from this, let us know in the comments, and I'll consider doing more of these on a regular basis. But obviously I only want to come on and talk if there's people that want to talk. And yeah, whatever it is you're doing today, go and check out my Trading for Beginners video. As I say, 500,000 views already. It's only a couple of months old, and you'll get a lot of value from that. There's loads of value on the YouTube channel about these questions in depth. Go and subscribe, and I'll see you guys on the next one.